The top-performing market in North Asia ended the year with a fizzle Thursday, with the Kospi closing flat on the final trading day of the year in South Korea. The result leaves the Seoul benchmark with an 11% loss for 2011. In comparison, stocks in Tokyo are heading for a near 18% full-year loss, with traders eyeing the 8,300 level by the time Japanese markets close for the year on Friday. China stocks are set to fare even worse, with the Hang Seng on course for losses of around 20% and the Shanghai Composite lower by about 23%. Sydney stocks will do slightly better, with full-year losses of around 14% by the end of shortened trade Friday. Anu Bhaskaran from Centennial Asia Advisors says it wasn't just the Eurozone crisis that weighed on the region's equity markets, but a whole slew of market-negative events that marked 2011.
You had the Arab Spring. I mean, many of us could see that pressures were building up in the Middle East, but none of us predicted the form that the Arab Spring took and the impact that had on oil prices and business confidence and so on. The great earthquake in Japan and the disasters that followed were also unpredictable but had devastating consequences on global economic activity. And then towards the end of the year, we had the floods in Thailand, and I don't think anyone expected a major flood in Thailand to have such impact on Asian supply chains.
Like other analysts, Bhaskaran says the first half of next year will be challenging, but things may improve beyond that.
You have US housing, which is clearly beginning to build a base for future growth. You have the European Central Bank almost certainly being forced by circumstances in Europe at some point to adopt much more radical and more aggressive monetary measures that could restore confidence to financial markets. You've got, thirdly, Chinese policy response to the slowdown, which can be quite effective. I suspect by the later part of 2012, the full effects of that policy easing will be felt in global economic activity, not just Chinese economic activity.
China is due to release PMI data next week, and markets will be watching the numbers closely for any possible impact on monetary policy. Beijing has relaxed bank reserve ratio requirements, but has left interest rates and property price curbs in place so far. Arnold Gay, Reuters.